We have to try it. We have to try it. We have to try it because theoretically, I mean, there is a lot of people who tell us, and in a nice way, that you guys are wasting your time. It is not going to work. The market, as we set it up right now, it does not make a preference to state-owned enterprises. It's going to be open for everyone. No, it's a direct impact. It's a direct impact because.
Thank you very much for making the time to speak with us. We really appreciate it. My first question starts with who is the Director General of Ethiopian Capital Market Authority? Who is he? And then how does your personal experiences become an asset in leading probably the youngest capital exchange in the world?
Thanks so much. My name is Brook Taye. I'm the Director General of the Ethiopian Capital Market Authority. And in terms of background, I have studied law and economics and worked in the private sector. But I think the most important background is working at the Ministry of Finance for little over 4.5 years. That helped me to understand establishing an institution and then working in this type of dynamic environment. And of course, this is a very young and ambitious capital market authority that tried to introduce a very important introduce the most important economic reform agenda of the government. So it's something that we're looking forward to introduce and really take the full advantage of the exchange.
That brings me to my second question, is that how does it feel to be the pioneer of establishing an institution and running it?
I really don't think about that. I'll be very honest with you. I'm not trying to be modest, but I don't really think about it. It's just a job. And of course, there is always that gratitude to work in this type of environment. But other than that, the other statements, maybe I'll go back in the future when I'm very old to look back. Yeah, it's something to reflect. Now I'm in the middle of it, and it's.
What does the capital market, the launching of capital market, would mean to ordinary Ethiopian citizens?
Yeah, so I think let's maybe first unpack what does it do. So and then we can correlate that into what it would mean for an individual. So a capital market is a market where an efficient allocation of financial resources could be achieved. A company that needs finance and a person that has the finance could meet in a marketplace in a more efficient way, enabled with technology, with full disclosure about the company that the person is investing. And the person who's investing could have also the opportunity when he or she thinks that it is time to divest from that company, there will be a market to find a willing buyer. So if you take this into a broader scale, what it ends up achieving is it would allow companies to have access to finance, especially in our circumstance. As you know, most companies rely on bank finance in order to start their business, expand their business. If these companies now can have an alternative access to finance, to expand their business, to start their business, that means they will hire more people. They will create an opportunity for individuals to invest. And then that will make us the beneficiary of this success. Because as an investor, if I have 1,000 birr today, if I invest it in a company, it's better in terms of return, especially if the company is successful, I will have a much better return. If I'm looking for a job in a certain sector, and that sector is now receiving finance through the capital market ecosystem, and then taking advantage of that, this market, the company expands and hires new people, then I'll be able to find a job in a company that's now expanding. So there are many different aspects of it. And also, I think there is one element that's not usually referenced because the focus is always on the equity market, the share market. But if you look at the debt market, usually governments finance their deficit by using the treasury bill, treasury bond, treasury note market. When they do that, it would allow them to use market mechanism to perform a deficit finance rather than print money. the less they do print money, the less they print money, the more would be good for the macro economy, because the impact on inflation will be subdued. That means you and I will be a beneficiary. Less inflation means much better for our money, much better for our saving. When we go and buy products, it will be much better for us. So there are so many different layers of benefits of a capital market, and we are not going to take or enjoy all the benefits at the same time. But this is new. We're going to introduce different capital market products step by step, and then we hope that it will succeed and then contribute its part in our economic growth.
You mentioned about companies raising capital, so it's still a work in progress, but generally what the candidates are going to be listed on the market is going to be state-owned companies. Doesn't that make the existing problem continue? Because currently the banking system is financing the projects, but what does it take for companies to be able to be listed on the exchange? And then how does that make a difference? When we see that currently, I think Ethiopian becomes a candidate, and then they're also promoting, and other state-owned companies are the candidates. So these are already well-financed, self-sustaining companies. But when we talk about small and medium enterprises, how can they benefit from this? If they're not, then it will be, again, financially exclusive.
Yeah, so I mean, it's the market, as we set it up right now, it does not make a preference to state-owned enterprises to come to the capital market and to raise finance. It's going to be open for everyone. So we only made an announcement on government-owned enterprises because the government can make a decision to make this process public. But there are other private companies, for example, right now, they're working with us and they're going through the process to be able to come to the market and then raise finance. But I think we need to split the issue into different aspects. First, even the state-owned enterprises, when they become public, when they go through the capital market listing process, they become truly a public company. You'll be able to become a shareholder of Ethio Telecom. Now, on your behalf, the government owns Ethio Telecom. You don't own Ethio Telecom. So what happens is when the 10% offering happens, you truly become the owner of a public company. So that's one benefit, because we all become owners of our own state-owned enterprises. And second, if the benefit that comes as a result of owning a state-owned enterprise, especially for a successful company like Ethio Telecom, if it continues with this trajectory and make profit and pay dividend, you'll be able to receive the dividend. The 100% that used to go to the government now goes into individuals who bought a share from Ethio Telecom. So that will be a second benefit that you'll take advantage. And the third benefit would be for the company itself, the amount that it generates after selling its share. It can use it for many different purposes. You can use it for an expansion or many other activities. Of course, it will be up to the owner, the Ethiopian Investment Holding, on how to use the proceeds that comes in. The second bucket, the second component, is small and medium-sized enterprises. For those, the capital market will have different products that will benefit them either directly or indirectly. Directly, there will be an alternative market on the exchange where SME type of products or things that will support the SMEs will be listed. For example, factoring could be one example where a PO, a purchase order, can be aggregated, securitized, and be listed. That would allow SMEs to be able to continue with their business because they will be paid much quicker, sooner than the current status. But the indirect benefit is the more the banking system has a headroom, because significant volume of money now is going into other companies that are currently going to the banks and then securing financing. Now they can get it from the capital market. It means the banks will have a headroom to lend to SMEs and other sector specific companies, where previously, because there is no space, they're not able to lend it to them. So that benefit could materialize. And then it gives also the SMEs a forward-looking trajectory by which in 5 years, 10 years, 15 years, once they grow, they will have also the opportunity to be listed, to sell part of their company, to issue a corporate bond. So, as I was saying earlier, all the benefits will not come in day one, but it's a good system to efficiently allocate finance. And we are designing an exchange, we're designing a capital market where everyone could be a beneficiary.
When we come to listing, they find the companies need to have neat and clean financial statements, their taxes need to be reviewed. There is generally hesitancy from general business area that making that public is very hesitant about it. So how are you going to tackle that problem to make sure that every enterprise have to declare their tax returns and everything? How are you going to tackle that problem? Because they're not usually up forward about it, including higher education, but it's a common problem in Ethiopia. If you work, your experience in finance will tell you that they're not upfront about it. And that is essential information that investors need. How are you going to tackle that?
So if you don't disclose, then you're not going to have access to the capital market. That's very simple. So we're very clear. If you're going to raise significant volume of capital from the market, from individuals, from high net worth individuals, from international investors, from institutional investors, what's expected of you as a company is to disclose. Periodical disclosure and ongoing disclosure. This is not negotiable, and the companies who are coming into this into the capital market, they fully understand this is what they're expected of them. If they don't fulfill their requirement, of course there will be a legal liability on board chair, the board of directors and the management team. And I think there's also a misconception right now, because I fully agree with you that companies are not forthcoming in terms of their finances because some of them are privately held and they don't need to, really. They don't need to disclose their finances. Some of them are not IFRS compliant, for example. So yes, I mean, it's their prerogative. They're entitled to do that. But if they want to grow their company, if they really want to take it to the next level in terms of expansion and growth trajectory, then capital market is a wonderful avenue for them to pursue. If they want to pursue that avenue, then they have to disclose. So we're very clear. Our proclamation is very clear. Our PO directive, our public offer directive is very clear. It has a requirement that needs to be fulfilled and will take companies accountable. So this is something that education has to also be included to teach compliance advisors, risk advisors, the CEOs of these companies, the board members of these companies, that disclosure is very important. And we have a good experience with some of the financial institutions that are currently under the purview of the National Bank, that they disclose their quarterly report, their annual report, they publish the audited financial reports. So we're hoping that other companies that are coming into the capital market will pursue the same line.
While basic capital market developed economic sustainable, well-functioning market requires enabling environment such as regulation, market autonomy, a stable economy, and then those are generally absent in our country, and general investors are discouraged to invest in Ethiopia. How do you believe that the Ethiopian capital market would deliver what it's intended to deliver in such conditions?
You're absolutely right. The conditions are not ideal in many different aspects, but these are not permanent conditions. These are conditions that will improve. The same way in some areas that we've seen deterioration, there are also areas we've seen a significant amount of progress. For example, just on year, if you look at the inflationary pressure, it's being, I think we've seen the tail end of it. Inflation is coming down, not at the speed and not at the rate that obviously what the government would like to see, but it's coming down. So it's not a permanent state that we're in. Things will improve, things will get better. But I think the area where we need to look at as well is what is being done in order for those situations that you've identified to be resolved. So under the homegrown economic reform 1.0 and 2.0, there is a clear strategy that put in place that the government identified the macro constraints of this economy. Inflation issue, debt issue, joblessness, foreign currency issue. All of this tie into the overall performance, the future performance of the capital market. So this reform agenda is ongoing, and we believe that this reform agenda will help the economy to further stabilize and then perform in its maximum capacity. Then the capital market will be the beneficiary of that.
Do you think the Ethiopian macroeconomic situation is stable enough to springboard the capital market?
By the way, look, so the not only Ethiopia, but the global macro environment, stability is comparable. Compared to what, right? Compared to what, 10 years ago, 5 years ago, yesterday? So you have to put a comparable to say, okay, in order to determine it's stable or not stable, you need to have a comparable. So Ethiopia is not unique. Many countries are going through a very difficult time. And there are many exogenous and endogenous factors that are leading to that. But I think for me personally, in terms of driving the capital market introduction and then introducing the exchange and to make sure that it delivers on its commitment, there are areas where we're looking at saying, okay, even with the current macro climate, what are the things that we can do to enable the success of companies who seek finance to be able to access finance and then to grow? For Ethio Telecom to sell its 10%, for X company to come in to do a public offering, an initial public offering, to start a huge project, the current macro environment does not restrict them from executing this transaction. The macro environment being better in the future would even enable them to progress in their growth trajectory. So the environment that we work under is, we have the current state of things. We don't think this is permanent. Things will improve. Based on that, we try to work on what we have right now on the ground.
The capital markets usually work in different parts of the world. When we come to African capital markets, many of them are established decades ago, but they're reasonably small compared to the global capital markets. So considering this, do you anticipate that the Ethiopian capital market can bring significant to this landscape as a latecomer?
Yeah, so I mean, it goes back to what I was saying earlier, because if we look at the African capital market in its entirety, 33 different capital markets, and you focus only on the equity market, the share market, the analysis is correct. They're not growing. There is more delisting than listing of companies, and the companies, their liquidity is very small, and there probably will be, few hundred shares being traded every day. You're absolutely right. They're not as big as New York or London or Singapore or China. But if you look at the debt market, though, which is not always gets attention, if you look at Morocco's debt market, the amount of money the capital market helps the Moroccan government to raise enough money from the market to do its deficit finance is remarkable. Look at Kenya. The Kenyan government can issue an infrastructure bond and is able to oversubscribe the amount it needs to fund infrastructure projects. And there are so many different examples on the debt capital market side where we see a lot of progress and success in the continent. But in terms of size, it's reflective of our economies. I mean, if you look at the top 3 or 4 capital markets in the continent, and then you look at their market capitalization, the total volume of the capital market on the listed exchange, and you look at their GDP, total volume of their GDP, and then compare it to other comparable countries in Europe and Asia or in the US. I mean, these are very small economies. So they're a reflection of the size of the economy rather than the reflection of how the capital market is poorly managed or is not delivering its performance. When the economy improves and then increases, then the capital market also improves and increases. So I think we need to work on the global economic environment of the continent, and you'll see immediately the capital markets performing, because one cannot function without the other. So if we look at in isolation and compare, let's say Kenyan capital market with New York, then it's not fair, because you have over $1 trillion economy versus not even a $200 billion economy in Kenya. So it's very difficult to compare. But for a $150 or $190 billion economy, the size of Kenya's capital market it can commiserate in terms of its overall size. But for us, we have a different advantage. As you said, we're a latecomer, so we're going to learn from all of these experiences. And second, we're not really starting from scratch. There is already a strong share market where all of these 30 banks and 18 insurance companies are established by Ethiopians investing their 1,000, 5,000, 20,000 birr and helping these companies to be where they are right now. So we're going to take advantage of that learned experience and then expand it, and more companies can come and raise capital.
After drawing the African experience, I wanted to ask you a question. There was a market collapse in West African countries due to mismanagement and the lack of system that ensures the regulations as well. So our country is not, we don't have that much strong institutions to enforce the regulations, the directive that your institution issues. And do you have a fear of mismanagement of this and maybe having a market collapse because of the mismanagement? Do you fear that because of the lack of institutional strength?
It's a fair point. The way I see our institutions is not comparing them with West Africa, because some of the institutions in West Africa are the creation of post-colonial period. Our institutions, our Ministry of Finance was created a long time ago. The way we do things, our bureaucracy predates not only me, my dad, and my grandfather, but it goes all the way to my great-grandfather in terms of the institutions that we built. Are they efficient? Do they address the problem? Are they transparent? We have all those problems, but the core strength is there. Our institutions, their core strength in terms of understanding bureaucracy, understanding how things need to be done. They need to be efficient. They need to be more democratized. They need to be more responsible. We need to have a capable civil servant. All of that are very important questions that needs to be addressed. But I think they're not weak where I would be concerned that there will be a market failure. We need, as a new institution, we need to strengthen ourselves. That's what we're doing. But the other point is there are many different lessons that we took from other jurisdictions where, in order to make sure that there is no systemic risk or catastrophic failure in the market, what are the things that we need to do to make sure that we have a mechanism to control that? In terms of institution and enforcement, I'll give you a very simple example. Since our creation, 15 months, we work with two institutions, clearly identified there's a major issue in the share market where companies could go on TV and then just say, promise you heaven and earth, and they will say 100%, you make this, you will say, we'll give you a house. What it requires is we sat down, we've discussed, every institution identified what they need to do, and we took action, and we are now seeing a complete suspension of TV advertisement or any advertisement that relates to share offering. As you've seen probably, there are no television advertisement that talks about people selling share, except from those that are authorized by the authority, where we look at their submission and we'll give them the permission to go and advertise. So our institutions can also react. So
you're saying any upcoming institution who is willing to raise money publicly has to go through the institution? Right?
They have to first submit their document to the Capital Market Authority. We have to approve their prospectus, And once that's approved, they can go to the media and then start advertising, selling their shares.
That doesn't necessarily mean they're listed on the stock exchange, right?
No. So that's a different.
Just regulating the primary market.
Exact. You're absolutely right. So we are the regulators of the primary market. In a sense, we're giving license for companies to go and do their primary market offering. When they go to the secondary market, it's the exchange that puts a rule that says, in order to come and sell your shares in my exchange, these are the rules, the listing rules, the trading rules that you need to fulfill. Of course, we also regulate the exchange and we look at the rules so that it's consistent with the proclamation. But the secondary market, the listing in the secondary market is the purview of the exchange.
Let me clarify this. For example, banks used to just go through different process and announce their shares, or any other companies, for example, the housing companies, any company. But now they have to come to you.
Exactly.
Any company.
Any company who wants to sell securities, which means shares and data instrument, has to come to the Capital Market Authority to get a permission in order for them to sell those securities to the public. There is a proclamation that governs that. There is a draft directive that we're finalizing. They have to fulfill all the requirements stipulated in these legal instruments before they go to the public and then start selling their securities.
Okay, so initially was expected to launch last year, right? So you postponed it to mid-2024. Now we're like a month away from mid-2024. Do you think you can meet the deadline and the launch is this June? So
I think in terms of the exchange, our current timeline is sometime in November 2024, but we need to separate the two. I can speak on behalf of the authority. The authority is operational. We are providing service, we're giving license, as you know, we're reviewing prospectus documents. So we're in business. We are officially launched and operational. So we're not even in mid-2024, we've started a while ago. I understand. So, but the Security Exchange is a different, institution, and they can speak much better in terms of their timeline, in terms of when they will launch. But what I can say is there are many different components, especially procurement, technology acquisition, and capital raise exercise. As you know, they've oversubscribed in terms of what they've managed to sell to the market. So they're pushing forward. But I think we are doing it as fast as possible with maximum caution to make sure that when it's launched, it will be a success.
What accomplishments you've done so far in terms of regulation, in terms of developing frameworks, as well as you said, acquisition of technologies. In your previous media engagement, you said we will have the technological products on our hand in 2 months, and that is 2 months ago. So what's the update on that?
Good. So in terms of what we've done, initially our major task is to really draft the necessary legal instruments and then go, make sure that they go through the proper legislative process. This is our employment regulation, the licensing directive, the fee directive, and others that would allow us to launch our operation as the authority. So our primary focus was really working through the necessary legal instrument so that we can be operational. So we've done most of them, and I think significant volume of our legal instruments either are enacted or passed the board. We've obtained the board approval, and few of them are currently, one of them at least currently sitting with Ministry of Justice to be registered. The second element is really, as a new institution, we need to hire staff, train, and then make sure that they're capable in terms of addressing our immediate challenges of issuing license, registering securities. Third is the technology, as you rightly mentioned it. There are two components of the technology that are critical for us. One is the Central Security Depository, which has been procured. Now we're in the deployment phase. National Bank is deploying it. So we're working very closely with the National Bank and the exchange to deploy the Central Security Depository. That part of the procurement has been completed. For the exchange, the automated trading platform, and then our surveillance. In fact, the the finance aspect of it is being addressed as we speak today by the team. So we're hoping that we've identified the vendors. They're technically capable and qualified. Now we're reviewing the finance and then negotiating and agreeing. But this is one of the reasons why we have also the timeline a little bit pushed for the exchange. And then the fourth element is market development. We want to make sure that we do a significant amount of outreach, talk to the media, explain what we're doing, go to regional states. For example, we were in Sidama last time. We had a conversation with the leadership, the municipality, the business community there. We've done it in Dredwa previously. We'll do it in Mekelle very soon. And we have to go to every part and parcel of the country and trying to explain to the universities, to the regional administration, to the business community, what's the benefit of the Ethiopian Capital Market Authority, how people could take advantage in terms of having aspiration to launch new products, new services, and what are the benefits, and preparing companies to be listed. So we're working with several companies who are interested to issue either a debt instrument or offer their shares to the public. We're working with them, providing them the necessary guidance in terms of the regulatory requirements and launching the regulatory sandbox with UNDP to make sure that as we learn to regulate, we will be able to incorporate new ideas and approaches to the capital market. So this is what we've been doing in the past 15 months.
So my other question is that, like I said, you answered it a little bit earlier, but how are you planning to make I understand there is a jurisdiction difference between the authority and the security exchanges, but how are you planning to make sure that the security exchanges still be open to like small businesses and the smaller capital owners?
So the exchange already indicated that they will have an alternative board where small and medium-sized enterprises could participate on the exchange. But it's not only about allowing or not allowing SMEs to be listed. It's also, is it the right capital for an SME? For example, if you're listed, as I was telling you earlier, your disclosure requirements are voluminous. For an SME, do you rather focus on your business, or you're going to hire an expensive compliance advisor with a very small amount of revenue coming in? Companies that are big, companies that are mid-size, they can afford to hire, institution advisors and compliance advisors, the legal team, to help them with that. So maybe there are other avenues for SMEs to access finance, but still with that, there will be a window for SMEs. That will be able to have access to not the main board, but the alternative board at the exchange. But again, the exchange is really working hard on this. It's one of the issues that we actually take very seriously, because we know how many big companies that we have in Ethiopia. So not a lot. Yes. So, we're not going to create an exchange for few companies. We want to make sure that this is inclusive, that will attract also as many companies as possible. So at the back of our head, we know that this is an economy with very large number of SMEs. Without addressing the binding constraint of finance to SMEs, then you're not really moving the needle. So we have that concern, but we do it in a very meticulous way, identifying, okay, it's not listing maybe, it could be something else. What is that something else? We always delve into it and then debate and then introduce the necessary mechanism. The factoring example that I've told you earlier is that. Crowdfunding is another example. So there are multiple products, in addition to other banks being able to access, let's say, a 30-year, they can issue a 30-year bond, which would allow them to take a risk in terms of lending. Because right now, it's your money and my money that we deposit that they lend. They don't sell bonds. So if they sell a 10, 20, 15 years of a 10-year bond, then that would allow them to take risk to lend to companies that may not have access to finance because of their credit history or because of their size. So there are cumulative work that will end up enabling SMEs to progress and become mid-sized and large companies, which we're trying to do our part in terms of allowing that.
So you stated earlier, this is the economy that is mainly mobilized by small enterprises, and so if it doesn't directly impact them, it wouldn't be a game changer of a market that's described by the Prime Minister. If it doesn't benefit the small enterprises, and maybe even you can expand this to the farmers as well, because that's the large part of our economy. If it is not posed to support them, can we describe this institution as a game changer?
Absolutely, absolutely. Because if you're looking at it only from the view of SMEs, then, as I was saying, SMEs may not be listed, may not have the maximum volume of access that they have. But you have to also understand, when we say that this will be a game changer, it's because that you're going to have an opportunity where you have a regulated market that only with your dream and business plan, that you can come to the capital market, provide the prospectus, reviewed, and if it's approved, then you can have access to 120 million people to finance your dream and your project. If that is not a game changer, I don't know what is. Right now, you're locked in. You can only access finance from a bank. And if that, you need to have 70% of collateral. How many of us have a 70% collateral for a big dream that we have? Not most of us. But now you're not going to rely only on a bank. You're going to rely on a fellow 120 million Ethiopians. So that is what it means when we say it's a game changer. Because we're going to allow individuals to make a decision on your business offering, and if they can trust, and then sometimes even want to take a risk and say, okay, we're going to finance your project. We trust her. Then you're going to have an efficient way to mobilize resource. That's what it means to capital market is a game changer. And second, goes back to the debt market that I was telling you about. For the government, if the government can have an efficient way of raising enough financing to bridge its budget deficit, that is also a game changer for the economy, which means it changed significant amount of people's. It would reduce the impact on significant number of people in terms of inflation. It's a huge component.
So it's like you're describing those benefits as the aftermath of the capital market. Not like a direct one.
No, it's a direct impact. It's a direct impact because for you to come right now, you have no alternative. If you have $1 billion, a billion birr idea, you need $1 billion birr to raise from the market. You have an amazing idea. You really think this works. A lot of people tell you it works. But if you go to a bank, they're not going to lend you $1 billion birr. So tomorrow, if you come with a prospectus that meets the requirement of the Capital Market Authority, and that gets authorized, you'll be able to sell shares in the market and raise that billion if the rest of the population believes that your idea worth investing in. So that's immediate, that's now. And on the debt market as well, the government is already doing a debt market offering every 2 weeks. It's on the primary market. What we're saying is, now there will be a secondary market. There will be a technological system where if you want to buy a government bond, a government treasury instrument, you will be able to do it in a more efficient way. For example, using Ethio Telecom Telebirr, you could probably buy 1,000 birr worth of government bond. There's no possibility now, but the capital market's existence, the exchange launch, would allow that to happen. So cumulatively, all of this is a game changer because it's non-existent right now.
I'm going to go back to the trend. Currently, there is a trend and hesitancy in companies going public. Mm-hmm. And given our situation with this, the conflicts, the inflation, and so on, the climate where private market funding is losing momentum, how do you encourage companies to go public?
We're not encouraging companies to go to public, but if they decide they want to go public, this is a wonderful venue that we're building for them to go to public. So we don't advise companies to go public or not to go to public. That's not our role. Our role is when companies decide they have a funding issue and there is a limited opportunity to get that funding, we want to be ready for them. If they decide today is the right time for them to come to the capital market and raise finance, taking into consideration all the macro problem, all the issues that you've identified, we're here for them, we'll support them, and the market will support them in terms of raising the necessary finance. If they think that they will want to wait 6 months, 12 months, it's their decision. But I go back to the point that I've mentioned earlier. It's not a permanent situation. At least I don't think it's a permanent situation. Things progress. So if you're not ready today, when things progress, if you start working on this type of big reform, it's too late. So regardless of whatever scenario, whatever state that we're in, establishing a capital market, making sure the legal instrument is in place, making sure the authority is functioning, making sure the exchange is operational, it's always helpful. It's better to be ready. And once the market, if there is an ideal state of the economy, I don't think there is, it will be always a challenge. If inflation is 0, it's deflationary. If inflation is 30%, it's really causing havoc in the economy. What is that sweet spot? It's always arguable, right? So, and this is part of the economic debate that people would have. But we want to be ready. The question is not, do we need a capital market or not? That's not the question. So if we agree that we need a capital market for this economy, let's establish it. And that's my job, establishing the capital market.
I think that the concern is more or less, will it work?
We have to try it. We have to try it. We have to try it because theoretically, I mean, there is a lot of people who tell us, and in a nice way, that you guys are wasting your time. This is not going to work. But my view is, I differ. I have a different view of the Ethiopian economy, the challenges, and then how we'll overcome this. But at the same time, I'm really not one that would just sit and wait for things, the sky to be blue and then blue horses in the sky. So we just need to work hard and then make sure that do our part, and then let's see.
Coming to my second question, that usually the capital markets will be dominated by people who already have money, and then it's usually attributed to exacerbating the income inequality in countries. Given in Ethiopia there is huge income inequality right now, do you think the establishment of capital market would exacerbate that?
Well, I think we can see the current share offering and how many people are buying shares in the banks, and there's a limitation. You can only have 2% share ownership. So that allows a lot of people even with 1,000, 5,000, 10,000 to buy shares in different companies. Ultimately, you want to create something that will lift a lot of people rather than reward only a small amount. One thing that we know is we're not going to create an elitist capital market that will only reward a certain amount of class of the population. That's not our intention. That's why we're permitting companies under formation without any background, any past record, to come and then present their business idea to the public, which is not something that exists in many different parts of the world. They think that we're crazy when we talk to other regulators that we have a system, which actually part of the commercial code. In fact, we're just extending that. We're not exclusively creating a capital market that will help a certain minority who don't even need the money, but can have access to the capital market. We're creating something as much as possible, a fair and equitable system to an extent that we can do that. But also, we think that we're also working in terms of democratizing access to finance. Currently, the narrative is access to finance is defined by, in many places, when you have access to a bank deposit, then it's agreed that usually that you have access to finance. Or financial inclusion is when you have access to a bank account. We count the number of people who have a bank account, and we say we've included financially this number of people. Our view is different. For us, financial inclusion is primarily when you have access to credit, and financial inclusion is secondly is when you can invest the money that you have. That is a financial inclusion that can democratize access to finance. So how do we do that? We allow, for example, we're working on a technology that would allow people to buy and sell shares using their phones. People to come to the market with big ideas to raise capital. Crowdfunding platforms that would allow, small companies with ideas to come and participate. So in doing so, we try to make sure that there is a fair and equitable access to the capital market.
Yeah, so the thing that you mentioned right now, you're trying to create a platform on which people can trade. And I think the recent incident that happened to the Ethiopian Commercial Bank, how people worried about the security situation of the Ethiopian finance system. So what steps are you taking in making sure such kind of event would not happen?
So in technology, nobody is safe. Any technology, vulnerability always exists. So the way that's a good learning example. We learn from it and say, okay, what has happened? How can we mitigate that? And how do we make sure that we don't repeat similar type of mistake? And we're going to rely heavy on technology. So first thing is to make sure that we're capable. We have deploy the necessary team, equip our team as much as possible, make sure that they're one step ahead from people who wanted to penetrate and then cause damage. So that's where we really focus ourselves and work on, and then get as many support as possible from international partners who are much more advanced than us in this area. Our team members are visiting technology centers as we speak, and starting from tomorrow, where they will be able to learn a huge volume in terms of what are the vulnerabilities of a capital market and exchange, where the authority needs to focus on. But it's a good learning exercise. There is no 100% guaranteed safe technology system, but we just need to first try to avoid that. If it happens, how do we mitigate it? Those are the things that we focus on.
There's a growing trend of fraud and online scamming. That's a global thing. It's financial scamming, and then fraud. Usually, capital markets are susceptible to that. And then, if the general public is not very, very educated, it's going to be significant.
Yeah.
So, in addition to that, companies may mislead their investors. Like I said earlier, they're not willing to disclose their earnings and withhold vital information. Has Ethiopia enacted comprehensive legislation and regulation to prevent such practices, like, for example, frauds, and then such as internal trading?
Yes, absolutely. The proclamation is very clear. Our directives are very clear. Market abuse, insider trading, fraud, and many different market-related activities that we need to mitigate. We have a very clear legal instruments, but we've also introduced a task force that includes Ministry of Justice, the Federal Police, and other stakeholders that would allow us to collaborate, because this is what you and I were talking about earlier. Institutions, the capacity of an institution. First thing is to collaborate, to make sure to understand what's your competitive advantage, what's my competitive advantage. We're all in the same room. Now we have identified, okay, how do we pursue and how do we address these challenges? So in my view, we have sufficient. It can never be enough, because always criminal actors are committing crime because they're one step ahead of you in terms of identifying the issues. But at least we have sufficient system that we're very comfortable to mitigate this type of criminal actions.
Apart from misrepresentation and the withholding information, security markets can be manipulated for the recipient, as I mentioned before, including what mechanisms are in place to protect investors from collusion of insider trading, specifically?
No, there is a clear legal instrument that would allow us to catch and to investigate and to bring to justice this type of actions. But we rely heavily on our market surveillance technology, which will record all transactions. So if it could be suspicion, whistleblower, or other investigative efforts, that will be able to identify any type of activities that could be classified as insider trading, and then we'll take action. But we rely on both technology, our enforcement team, and then of course we rely on the media heavily, because the media would know more when there is this type of activities that happens, and then whistleblowers as well. So a collective effort of all of that would allow us to mitigate this type of issue, and then we take serious action.
I think I'm done with my question.
No, thank you so much.